We talked yesterday at this time about the trouble at Netflix, and it's only gotten worse since then. In those 24 hours, the streaming giant stock fell by more than a third yesterday. 35% decline was so severe, even brought down some competitors. Disney, Warner Brothers, Discovery, Paramount, Roku, all falling 5 to 8% at the closing bell themselves. Joining us now, columnist and editor for the New York Times DealBook and CNBC's Squawk Box co-anchor Andrew Ross Sorkin. Andrew, good to see you again this morning. So we were talking about this yesterday, that disappointing loss of subscribers that was released on Tuesday from Netflix, which was off by like 3 million. They said they were going to add 2.7 subscribers. Even that was seen as low by some analysts. So what happened yesterday after we talked that dropped this by a third? That's not an insignificant portion of their bottom line.
Well, just to put it, by the way, in context, $54 billion just disappeared, went into money heaven somewhere.
Wow.
That's how much money was lost in terms of total value over the course of one day. And really what's happening here is a rewriting of the narrative around Netflix and the narrative around streaming and the prospect of it being as profitable and as big a market as perhaps people thought, at least in the most immediate term. We talked about how so many of these streamers have all been chasing, or I should say traditional media companies chasing to become streamers. Warner Media, you talked about, Discovery, our own parent company, NBC, NBC Universal. Everybody has been looking at Netflix as a model, and I think there are now some real questions as to what that model ultimately looks like and how that stock turns around. You're looking at the stock right now effectively flat, but again, as we just said, down 35% just in the course of a day, and has a lot of media executives scratching their heads. Also, by the way, raising some prospects potentially, given that the prices come down, about whether Netflix itself one day becomes a takeover target. All these big traditional media companies long ago wished, in retrospect, that they were able to buy Netflix. Now Netflix, given that it's $54 billion cheaper today than it was yesterday, I think there's some people penciling out and also raising questions. Could they do it? Would Washington, would the Biden administration allow it?
Yeah, it's so funny. I mean, not funny for Netflix, but we heard the joke coming in about, television with, content with commercials. It's called television. We go through all of this churning, and I always go back to the Michael Wolff book that was, I guess it came out about 10 years ago.
Television
is the new television is the new television. Then he was talking about how in the late 90s it was AOL that was going to take over everybody. And at the end of the day, we're seeing it again. It was going to be streaming platforms, television. At the end of the day, those ads, I mean, it makes sense for Wall Street. You talked about this yesterday, but I had an industry insider talk about Hulu and said, Joe, the thing that you don't understand is you don't want to see commercials. So you probably have the $11, $12 Hulu commercial free. I go, yep. And this guy, this industry insider said, do you realize that Hulu makes the overwhelming majority of its money, like 80% of its money, off the $4.99 subscribers who will watch the ads, pay $4.99 a month, and that's where they get all of their money. It seems that that's a reality that obviously works for Peacock. It's also a reality, though, that I think is probably facing Netflix in the future, right?
Absolutely. And look, Reed Hastings, the CEO of Netflix, for a very long time thought that the subscriber-only, no advertising was a better model, partially because it was just simpler. Partially, he thought it was about the experience. But when you think about the revenue possibilities longer term, it's not you look at somebody paying $4.99, $7.99 plus the advertising. It actually makes up even more. They're making more off that customer, the advertising plus, than they are the person who's paying the full amount, the 11 or 12 or 13 bucks for Hulu that you were talking about. So there is potentially more money to be made that way. We'll see whether Netflix does it that way.
Yeah, speaking of streaming, let's talk about Spotify. Spotify and the Obamas, they've been knocking heads over the past couple of years, not about Joe Rogan, but about money. Exclusivity, Spotify wanted it. The Obamas didn't. Now, I guess they're leaving Spotify and shopping for a new deal worth tens of millions of dollars.
This could be its own podcast original, a limited series on the drama between Spotify and the Obamas. Spotify making a deal originally with them worth tens of millions of dollars. Frustration on both sides. Spotify was upset throughout that there weren't more podcasts being produced by the Obamas, with the Obamas in them, not just with their name on them. And the Obamas frustrated that it was exclusive and staying only on Spotify, so they couldn't get to a wider audience. Effectively, Spotify saying, we're not going to up that deal. And the Obamas trying to sell a deal to others. iHeartRadio is one of the names being bandied about, Amazon being another. So we'll see where they land. Of course, they have that other deal with Netflix.
Oh, my God.
Yeah.
Okay.
All right. CNBC's Andrew Ross Sorkin, thanks so much. Greatly appreciate it. Always really good to see you. And me.